All right, what's up guys? Anthony here, Special Analysis. Welcome to the video. Gonna walk you through my thought process as I do on a regular basis. Because we know that only two things matter, right? That is volume and price action. So, looking at light sweet crude oil here, little bit of a choppy morning, guys. I'll be honest with you, I did not place a lot of trades, okay? I really stayed away from this because it was just super ugly, okay? And when it's super ugly, the best thing you can do is just stay away from it. Like, that is what it is. So let me tell you what I did do today. Right here at this channel structure, drawn off of price action from the overnight. Got a bunch of buying absorption that transpired here on this candle, not necessarily on that candle. Okay, so I didn't touch that. I did take a short here. I took profits very quickly at the VWAP, and then the balance here at the rolling VWAP. Okay, you can see downward trend. Looked like we may have made a bottom. This is the 9 a.m. open. We drive all the way up to that channel structure that you can see price reacted to earlier. I play it short. Okay, not dissatisfied with that trade. However, I did feel like this may have been the bottom for the session. So I wasn't looking to trade all the way back. I was looking to trade to what was probably going to be the newly appointed higher low. Started getting a mixed bag here at what I considered the higher low. I told my traders live while we were trading, I'm like, hey, you know, I see this floor being put in the market, which could hold price and drive price back higher. What was my target? This channel structure first, right? This prior high. But if we placed a higher low, my expectation was a higher high, and that higher high was set at 85.70 to 85.80. That was the range I was looking for. Now, why do I set, obviously, a retest of the prior high, first place, for some profit-taking consideration, also kind of safeten the trade up, move your stop to break even. Whatever happens next, happens next. So we take that push, we break the prior high, we break the channel structure. Again, not super surprised. We pull back and set a higher low, okay? Right here, got some selling absorption. I buy this. Okay, and I take profits very quickly as we just approach this prior price action. Market bounces around. Notice we push higher, and we're not able to overtake this prior high. So I have on a shorter time frame, you almost have a shoulder, a head, and a shoulder. And then we break down through what would be considered the neck, if you would. So price breaks, okay? What am I looking for? We could get a double bottom here and push back higher right at that channel line. So I was a little concerned about trying to buy long and also sell short here. So what did I wait for? And I just closed this trade right before I shot this video. Market pushes down, okay? Creates a higher low here. So I have an impulse. I have a correction. Where there was previously absorption, there was new absorption that transpired almost in an identical price point. I sold it here, I bought it back at the 2 VWAPs, and I was out. So I didn't take a lot of trades. Like I said, I took one a little earlier here because I liked this against a time frame, a higher time frame channel structure. I liked that. I left this alone because there was mixed signals, right? I bought here because this was the impulse correction. What was previously resistance should be newly appointed support. It was, okay? Just traded back into these highs. Left it alone. Price comes back down, bounces back up. We break this low ever so slightly. Could have been a liquidity grab. But as soon as I saw this absorption of buying, I was a little bit concerned. So I just I wanted to step in, and then I felt very quick to step out. This does push lower. We push back up. I'm looking for absorption in basically the same place. I get that. I get a nice finished auction on the top of this candle here, and then we sell back right into these lows. I took my profit very quickly at the VWAPs. I mean, literally as quick as I got into the trade, my stop was moved to break even. And that was it, guys. And it's 1 o'clock New York time. I'm done for the day. Again, sometimes my charts come off a little messy, but they're very specifically providing me the information that I need. If the market's going lower, I'm looking for lower highs and lower lows. If the market's going higher, I'm looking for higher lows and higher highs. Okay? If the market's trending beautifully and I can partake in a momentum trade, then I will. If the market's not trending beautifully, which this is very choppy, what am I looking for? I'm looking for the pullback. If the market's going down, I want to sell high, right? If the market's going up, I want to buy low. Now, you can see we made an impulse, we made a correction, made a little kind of lower high here where there's notable absorption. If we break this low at 85.20, we probably squat into 85.05 or 85 even, and then potentially retest a little bit lower, right? Unless we retake the VWAPs here and we start trending higher, it is what it is. But we are making notably higher lows for the moment. This does not look super strong. So we'll see what happens, okay? But that's kind of the way I work through it. At the end of the day, guys, I tell this to everybody. Whatever it is that you are, wherever you're at in your trading career, I encourage you to study volume and price action. All right, there's a lot of great tools out there that you can use to help you do that, but there is no substitute for the time spent in front of the computer during live market conditions. Right? If you're not ready to trade with live money, which most people are not, trade a paper trading or simulated style account, refine that trade plan, and then move on to execute your trades with a small account and then scale from there as you're comfortable. Okay? At the end of the day, guys, rushing into this business is only going to hurt you. I tell my traders all the time, it's 3 to 5 years watching the charts on a daily basis. Okay? I watch the charts for 6 hours a day, 5 days a week. That's 30 hours a week, 120 hours a month. If you're not willing to put the time in, you're not going to be able to interpret what's transpiring now and then what's likely to transpire next. Okay? There's, again, 2 things I strongly encourage you to invest your time in watching. Volume and price action. Those are the 2 things that absolutely matter. All right? If you're going to get into order flow, wonderful. Okay? The order flow goes into the depths of liquidity, which is provided by a program like the Bookmap. The tape, which is the time in sales as the orders are being processed. There's volume profile. There's delta profile. There's a footprint chart. Footprints are made of bid and ask, or made of delta, or made of volume. It really ultimately depends what works for you. Okay, so take the time, get acclimated with staring at the chart. Okay, watch the chart during live market hours. Okay, make decisions, write notes, paper trade until you become very fluent in what you're doing. The beautiful thing is, listen, if you're working a full-time job, which most people are, TradingView, among many other charting platforms, offer a replay. Okay, so if I want to watch the market, from 7:30 a.m., I just cut it back to 7:30 a.m. and then I hit the play button. And now I can watch the market as each candle transpires. Is it the same as watching it in real time? No. But if that's all you can do at the moment, then do it, right? You know, when I'm done with my 6 hours a day staring at the chart, staring at the volume, staring at the order flow, what's next? After that, at the end of the day, I step away first, I have lunch, I come back, and then I sit down and I journal everything I did that day. I regroup on why I did the things I did so that I can learn from my mistakes and learn from my successes. Because trust me, you're going to have both. You're going to have great days where you make a lot of money. You're going to have really crappy days where you lose a lot of money. And you have to learn from both of them. I believe that once you become a trader, you become a student of the market until basically the end of your career. For me, it's the end of my life existence. Okay? I will be a student of the market until I take my last breath. Right? If that's the commitment level that you have, then trust me, put the time in. 3 to 5 years. Stare at the charts. Understand how price, action, and volume work together. Dive into order flow. Figure out what works for you. Build a plan around it. Practice it with a great amount of intention. Right? This is not a game. This is not a video game. You have to do this. You have to trade with intention. You're going to be risking your own live capital, or if you're using a prop firm, trust me, you're going to pay to have access to that prop firm. All right? Those guys don't make money because traders are good traders. They make money because most traders suck. Very few traders ever see payouts from prop firms. Okay? I've never used one. I know that I lose my tax benefit if I do use one, instead of having the 60-40 split. So I've always only traded my own live money accounts. That's just the way I trade, right? You may trade very differently, and that's totally okay. But I encourage you to put the time and effort in. If you're using software, software is a phenomenal training wheel, if you would, to getting you to understanding volume and price action. Whatever approach you're taking to the market, if it's software, study the software. Study how the software reacts to the market so that you understand what the software is telling you when, where, and why. If you're a traditional trader like I am, study the candlesticks. Pick a time frame. All right? Lots of traders trade different time frames. They trade tick charts, a 5-minute chart, a 3-minute chart, a 2-minute chart, a 1-minute chart, a 10-minute chart, a 15-minute chart. Pick the time frames that work for you. My higher time frame analysis is done on a weekly chart, a daily chart, and a 4-hour chart. Those charts give me basically what I need to make educated decisions about where the market's at during the course of the day, so that I'm not trading into higher time frame support or resistance, and I'm trading with the higher time frame support or resistance. It may be very different for you. Some traders out there just look at a 5-minute chart and that's it. Listen, if that works for you, great. Great. Weekly chart, daily chart, 4-hour chart, 5-minute chart, 3-minute chart, 1-minute chart. Those are the time frames I personally look at. It doesn't mean that that's what's right for you. That's what's right for me. So again, I shoot these videos from a completely educational perspective. I'm not here to sell you anything. If you want to trade with me, great. I have a program that you can join me live every single day. Wonderful. If you don't, that's fine. What's most important to me is that you take something away from these 15-minute videos so that tomorrow you're able to look at the market in a more clear fashion than you looked at it today. So I appreciate you guys. I hope you learned something from this video. If you did, please leave a like. If you have a question, please leave a comment. I will answer it personally. If you've not subscribed to the channel, I ask you to, just so you're notified when new videos get posted every day. I try to put one together on a daily basis, 15 to 20 minutes, recapping my thought process, giving you some intuition to the way I look at the market. Whether it's right for you or not, that's totally up to you to decide. But after doing this for 13 years, my entire goal is to give you value for the 15 or 20 minutes of your day that you spend watching my videos. God bless, guys. I will see you tomorrow, and have a wonderful day.